So price can react from this whole zone before the drop, which is still valid. If price comes into here and drop, it's still valid, okay? So now let's see if we can take any trade. This candlestick pattern right here is a good rejection candle, but it's be an aggressive trade, okay? Let's see how many pips stop loss. This is like 3.3 pips stop loss. It's actually a good sell from this zone due to this rejection candle plus the price behavior on the 5 minutes plus 15 minutes, okay? But this will be an aggressive trade. So let's say we take this sell right here, and entry right above this. This is like a 3.3 pip stop loss. And then we go to target the Asian low or this point of interest right here. So let's see what price needs to do. Okay, at this low right here, we'll be going break even, or at this low, we'll be going break even. That's if price gets to our break even low. So let's see what price is going to do. Okay, cool. That was fast. Yeah, that was fast. So at this low right here, that was where we went to break even. And then price immediately took out Asian low. This was Asian low right here. Okay, price took out Asian low. And remember, we were looking to trade from this point of interest after price takes out the Asian low, and there we have it. Okay, so let's say we place our target for this sell right here, and this was a 7-hour trade. Okay, now let's go back on a higher time frame to see what price is doing. So we look at the 5-minute time frame. What did price do? Price came into this point of interest, but I think this was from the 15 minutes time frame. Yeah, that was from the 15 minutes time frame, the last unmitigated, okay? So we probably want to like buy from here. So let's see if we get a confirmation to buy from there. Let's see what the 1-hour time frame is saying. Now, from the 1-hour time frame, price still took out this SLQ, and then we had this low before the mitigation of this point of interest, okay? So then we go back on the lower time frame, go back on the M1, okay? So these are point of interest. Now let's see if we can get a refinement on that point of interest. So on the 1 minute, there was no unmitigated week on the 1 minute. This unmitigated week right here still stands, okay? And as price took out the Asian low, let's see if we get an entry. Okay, this was the Asian low right here, okay? Immediately price took out the Asian low on the M1. What did price do? Price gave us this last rejection candle right here. And this rejection candle is giving us like a 4 pips stop loss right here. This is a good buy. I think most traders caught this buy in the morning, but it's an aggressive buy, right? Taking the buy from here at the candle closure and stop loss below here, somewhere around here. It's a good buy, but it's going to be way too aggressive, okay? So we're going to wait to see if there will be a reason to take any buy from here, okay? So got this from the 1 minute time frame. Our 1 minute range is going to be from this high to this low, okay? So a possible price delivery, right? So if we had this, fake BOS inducement, if price should come back down here, we want to take a buy from here. Okay, so let's see if price give us that. Nope, there was no re-entry based on the price delivery. Okay. No re-entry right here too. Okay, then we go back on the 5-minute time frame to see what price is doing. From the 5-minute time frame, after the grab of Asian low, price is going higher. Probably to go take out this last high right here. Okay, 15 minutes, what's price doing? Same thing, nothing interesting, right? So we're going to stick on the 1M. And if you're on trading view, right, you can also be using the 3 minutes time frame, because that's actually a very powerful time frame. Okay, we could be using the 3-minute time frame. So now let's go back on the 1M to see what price we're doing. Okay.
But switching the time frame makes it very subjective, I think, or not?
No, it doesn't make it subjective. It just makes you know what you're doing, okay? It makes you know possible target area. and also the direction of the market, right? Because from the M1, the market can be confusing, right? But then if you like go on higher time frame, you can see price action clearly. Okay. You go from the M1 now, the reason for taking this sell right here was the price behavior on the M1, right? But then if we did not like go back on the 5 minute time frame, right? To look at what price is saying from the 5 minute time frame, we would not have marked this PY right here that made us to this sell. Because remember, if you're having a particular confluence, right? If one time frame is giving you one confluence, another time frame is giving you same confluence, and that time frame is giving you same confluence and POI, right? That trade seems to be like a valid trade, okay? Because this POI right here was from the 5 minutes and also the 15 minute. And also the price behavior that happened here was also from the 5 minute and 15 minute. So switching of time frame is actually going to make our trading easier, okay? Because we are going to be able to see price action clearly, okay? You get that?
Yeah.
So now on the M1, if this was our external, right? Now we had this unmitigated weak right here, and then this was M1 ILQ. Okay, this was M1 ILQ. Okay, sorry, before I mark this out, right? Don't forget to always mark out your external structure so you don't get confused. Because this right here is actually SLQ. Okay, so marking out structure point, if this was our external high, external low, right? This was where price broke structure. Then we had a new high and then a new low. So this was M1 SLQ, right? And price took out the M1 SLQ. So what we'll be looking to do right here is a possible sell right here. Remember, we missed this buy, right? So to be looking for a possible sell to go back to mitigate this PY because right here, there was no mitigation. So we could probably want to see a mitigation of this PY before we can get a higher pricing. So far, are you understanding?
Yeah.
All right. So now let's see what price is going to do if we get a mitigation of this week that we can hedge from. Okay, there was no mitigation, right? And also remember these are external range, and then we're having internal structures right here. Okay, and price just took out this internal low right here. Okay, so this could be a possible price delivery. This could be a possible price delivery that could enable us to take this buy right here. Okay, so now price took out this right here. Okay, then let's see if there's anything interesting on the 3 minutes time frame. Okay, let's see if there's anything interesting on the 3 minutes. On the 3 minutes, let's mark out the structure point. We had this high to this low, this high to this low, and then this new high right here. Okay, so we're actually seeing this, 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 and this on the 3 minute time frame. Then price came back to take out this low. So this is like an internal structure MSU, that's the price behavior on the 3 minute time frame, which is also visible on the 1 minute time frame, right? So as price take, yeah,
Yeah, I understand.
okay. So as price took out this right here, okay. Initially, after price has taken this low right here, we're supposed to wait for a candlestick pattern, okay, which is either the rejection candle, the engulfing, or the railway track, okay. This is what we're probably waiting for, okay. For now, because this buy is probably a high probability buy, okay, so it could be taken by based on candle closure, and candle closure is basically you waiting for a candle to close, not necessarily any of these candlestick patterns, right? So candle closures could actually be a regular candle, but then it's going to close a bullish candle, it's going to close in line with that direction, right? So if you're selling based on candle closure, we want to see a bearish candle close. if we are buying based on candle closure, we want to see a bullish candle close, right? So as price took out this liquidity right here, we had this candle closure with this tiny bit of rejection here. So we want to take the buy at this candle closure, which would be right here. And then stop loss would be protected just below this loop right here. So this is what we want to have. So let's see what price is going to do. So now where are we going to go break even, right? So at this high right here, probably we might have gone break even after price took out this high. Okay. So then let's see what price is going to do after this. Okay, so we are in this buy, then we go back on the higher time frame. Okay, we go back on the higher time frame and see what price is doing. So we've gotten one re-entry. On the 5-minute time frame, price took out this high, and then we have this low. So we'll probably be getting a retracement and then a continuation because our target is from a higher time frame. Okay, so our target is from the 4 hours. We are looking to target this high right here. Okay, so let's go back on the smaller time frame. Now keep looking for re-entries, re-entries, re-entries. And as you're doing this, right, you can also be marking out possible area of rejection, possible area of hedging. So that's where this level comes in. This was where we marked, okay? So on the 5 minutes, price is doing this. On 3 minutes time frame, nothing interesting going on the 3 minutes time frame, right? Then let's stick to the 1 minute time frame to manage our trade. Okay, so if you're having a like fixed RR, right, this right here would be a 10 RR, and we could trade from this. But then because we are targeting a very far high and also this point of interest for possible sell, so let's say this buy could go right here. Okay, then now we watch to see what price is going to do. Remember the M1 MSU model, right? That's for re-entries. So we wait to see the re-entry model in order for us to take trades. Okay, right here on the M1, we had this structure low, this high, this low, and then a new high. So if price breaks this low and come into this whole demand range, we can look for a candlestick pattern to buy because this is from the M1 time frame. Then we go to the 5-minute time frame. What is price doing on the 5-minute time frame? Price just broke this high, give us this on the 5-minute time frame. So this also our ILQ on the 5-minute time frame, right? Then we go back on the M1 to see what price is doing. So today, so price did not take out the ILQ low, but then price kept on going higher. Then we keep on watching to see what price is going to do. Right here on the M1, we had this high, this low, this high, and then we had this low right here for the buy, right? Now we missed this buy right here. Let's go back on the 5-minute to see what price is doing. Okay, on the 5-minute time frame now. Remember, this was our 5-minute structure point, right? This right here was 5 minutes EPA. This high got mitigated by this low. As price got mitigated by that low, on the M1, that was an EPA already. This was an EPA. We missed that, okay? And as price created this EPA, on the M1, looking at structure point, we had this high, this low as external. Then we had this high, this low as external. But then price then gave us a structural liquidity right here. So when price was coming down, it took out this 1-minute structural liquidity before it begins to go higher. We get that. So this would have been one of our entry, but we missed it. So now we're looking at this load that got taken out, and this was EPU, okay? Then we go on 3 minutes, what price is doing, nothing important. So let's go back on the 1M. So right here, price took out this low right here, okay? Price took out this inducement low. It gave us this 1-minute EPA. And immediately price mitigated that EPA. Price gave us a rejection candle. Now there's something about price, okay? If market is pushing in one direction, right? Is aiming for a particular liquidity to go grab, right? Sometimes you do not get a deeper retracement for
Yeah.
re-entry. Price just needs the little mitigation, even if it's EPA or a refined PUI. Price just needs a little mitigation for it to continue to move higher. And that was what price did here. That was what price did here. That was what price also did here. So price mitigated this EPA, give us this rejection candle. So we could probably be taking the buy at the closure of this candle, which should be here. And then stop loss just below that candle. Okay, so price did all of this, and then price started coming down. Okay, this ended up as a loss right here. If you are the type that go break even on time, this would have ended up a break even after this high got mitigated. Okay, so if taking this loss, then we can go on the 5M. So we can go on the 5M to see what price is doing. Now, from the 5-minute time frame, what are we seeing? Okay. Now, remember, we are having only this PY from the higher time frame to look for sales, right? So all our attention will be on the buy, on the buy, on the buy. Okay. So the moment you start going back to look at what price is reacting from, you say, okay, price is currently here. It's reacting from this right here. Okay. That's where you keep getting false move. Taking sell, price just gives you a little retracement and all. You see that price reacting from something in the past, you try to take a tiny sell, price is going to take you out. So that's what price is currently doing. Then on this 5-minute time frame, what are we seeing? This is our external, 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 external low. Price came all the way to this high and then broke the low. So this is our 5-minute ILQ right here. And then this is mitigation of EPA plus this unmitigated weak. Any entry on the M1, we are going to take, okay? That's what 5 minutes is saying. On 3 minutes time frame, what is price saying? Price literally showing us the same thing on the 3 minutes time frame. Then go back on M1 to manage our trade, okay? So we're looking for a candlestick pattern. Sorry, I failed to mark the POI on the 5 minutes. This was the POI right here, okay? Then on the M1, a candlestick pattern to take the trade. Now, are seeing this, okay? Price took out the inducement already. This week failed, so this was our POI. Right here, there is no indication, but we are seeing a fake break of structure and inducement, and price is coming down. So this could also be the price behavior, okay? Because at this point, we had fake BOS, inducement, and then price went to the true break of structure. Now, looking at it the other way around, this could also be the fake BOS, this could be the inducement, and then price came back down. So this is like a price behavior. So now, taking this buy right here, can wait for a candlestick pattern, but I think I took this buy based on candle closure right after here. Okay, this was candle closure, okay? But it's actually advisable to wait for mitigation of your PY before you take trade. It actually reduce the stop loss hit, okay? So let's take this buy right here and stop loss below this candle, okay? So we're risking this. It's a very aggressive trade, okay? So now we are having this week as our last unmitigated week plus a possible price delivery, okay? Because looking at the M1 time frame, we have external high, external low. Price giving us a fake break of structure inducement, and then this low can actually be a liquidity low, maybe like a structural or an internal structural liquidity. So let's see what price is going to do. Price took out that high. So as price took out this high right here, that makes all of this internal structure, okay? So if price takes out this and goes higher, this also SLQ. If price take out both of them or takes out all of them, that's still a structural liquidity. Let's see what price is going to do. Price kept on going higher. So we're having this, 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 and this. So this also our liquidity, our break of structure. If price takes this out, this will be the fake break of structure. This will be inducement. Then we're waiting for a mitigation of something right here. Okay, so what is price doing? Right here, price just took out that inducement low. Okay, price just took out that inducement low. And then going on the higher time frame now to see the structure point, to see where we could probably be buying from, right? This would be the 1 minute EPA. So let's go on 3 minutes. This is also an EPA on 3 minutes, on 5 minutes. Now on 5 minute time frame, this is a 5 minutes EPA. Okay, with a 5 minute EPA. And then we are having 1 unmitigated week, 2 unmitigated week, 3 unmitigated week, 4 unmitigated week to trade from. Now, as we're having these 4 point of interest to trade from, we don't know which one price will react from. Okay, that's when we go on the higher time frame, 15 minutes time frame, to see if we get any possible POI. Now on 15-minute time frame, we are only seeing this week on 15 minutes time frame. Then we go back on 3 minutes. This is still the same week right here. And then we are also having this week on the 3 minutes and this POI on the 3 minutes. Now, all of these POIs, right, they are also called the MSU POIs. Okay, they are also called the MSU POI. Why is it called MSU POI? On this time frame, we had the fake break, inducement, true break of structure. So any of these POI right here could be the MSU POI because it is the POI that was created due to liquidity grab and after true break of structure. And after price took out the true break of structure, it gave us additional fake break of structure inducement. So if price mitigates any of this, give us a reason to buy, we are going to buy from there. Do you understand that?
Yeah.
All right. So now let's watch what price. So we're looking for either this or the PYs for reaction. Now trading this buy that with this rejection candle right here would be aggressive, okay? Because price just beat out this and there was no mitigation of this or this. So let's see what price will do. So price just mitigated the EPAs, both the 1 minute and the 5 minute EPA, okay? So now we are also waiting for this POI, or maybe when we get another reason to take the trade, we take the trade, okay? But trust me, it's advisable to always wait for point of interest, okay? Then let's see, no candlestick pattern to trade from. This will not be considered as railway track because we're having this very long candlestick wick right here, okay? But then price also took out this liquidity. But then on this time frame, right? This was external, this was external. Price took out 2 levels of external structure. As price took out these 2 levels, price could easily do this. This like a possible transactional liquidity. So that would give us like a guide not to take this buy because price will definitely come lower to take out this low. Okay. So let's see. Okay, right there, price broke through this point of interest immediately. So we are taking this off and then we are focusing on these two. Now, until price gets into this point of interest before we look to buy. Price take off this. Okay, no, we did not. Are you understanding what I'm doing?
Yeah, you wait for the POI.
Okay. So right here, price almost mitigated this point of interest right here. Okay. Let's see because on the 5 minute time frame, this can be the MSU POI and this can also be the MSU POI. And price then took out the structural liquidity low right here. Did you take that out? Yeah, it did take that out. So it took out the structural liquidity right here. So we could be taking this buy aggressively based on this candle closure, right? We waited for a bullish candle to close, so you could literally hop on this buy, okay? But for the sake of this back testing, let's wait for a candle closure. So even if you want to be taking this buy after the candle closure, right? You
But
make
this
sure,
is not a candlestick entry for us, right?
yeah, it's not a candlestick entry, okay? It's just a candle closure after we've gotten all of our confluences that have been met, okay? Because
Yeah, yeah.
most times you will not get the candlestick pattern, right? Because now for this first sell right here, we had a candlestick pattern. We had the rejection candle. For this one, we had the rejection candle. For this one, it was just a normal candle closure, but with a little sign of rejection. This one too, we had a little sign of rejection, no mitigation. But for this one, there is no candlestick pattern right here, okay? The only reason that I'll be taking this trade is because price took out this structural liquidity and came back to take out this low right here. And then price was close to mitigation of this POI after the 5-minute MSU POI. You can remember the MSU POI, it's like an additional confluence for our buys, okay? That's the MSU POI, additional confluence. And this could be the MSU POI. This could also be the MSU POI. So the only way that you'll be taking this buy, right, is for your buy to be protected. So if we're taking this buy right here, your stop loss should be below this zone, okay? Because price can also do this, come back down to mitigate this PUI before going higher, or maybe it might even break through. So we might be seeing this right here as our trade and stop loss. Or if you're comfortable with bigger stop losses, right? Then you can do this and make your stop loss be protected, right?
Mm.
So if you hit your stop loss, you know you're no longer looking for buy, or you're looking for sell. So if you're taking this based on this candle closure, our stop loss will be below here for it to be protected in case price comes back to mitigate this. Do you get that?
Yeah.
All right. So let's see. Okay. And as price is moving, right, we are also looking for re-entries, be it on the 3 minutes or 5-minute time frame. So still marking out external structures. This is our low. Okay, let's start from here. We had this low to this high, this low, this high, and then, okay, we had this low. So from this low to this high is our external range. All of these are like internal structure points. So let's see what price is going to do. So right here, we are seeing a price delivery. Okay, because from this high to this low right here is our external structural range. Okay, and then we are having this, this. Okay, inside of our external structural range. So if price takes out this low or this low, we can take our buy. Okay, so let's see what price is going to do. If we're going to get a grab of the liquidity, so right here, price took out this one. So let's zoom in to see if price took out that low. Well, I'm not sure it did. I'm not sure price took out that low. It did not. Yeah, price did not take out that low. So assuming price took out that low, that would be like the price delivery. And then we'll be taking the buy from this rejection candle. But then we are not taking that buy anymore. Okay, and that was a fine move up. Then remember where our target is, right? Our target is at the 4-hour true break of structure. But then because we are not too greedy, we'll be targeting this high. So the buys that are running, right, are this one, and this one. So for this one right here, our break even is somewhere around here. And remember, if you're having a target, right, where are we supposed to take partial? When price gets to like 70% of our target. So for this first buy, we're targeting right here to partial, this one somewhere around here, this one somewhere around here to partial. So this one could be around here or something. But depending on how fast the move is, okay, we could just partial, depending on how much profit is running. Okay, so for this one right here, price is approaching this high. So even if price gets to this high now, we can then take partial from both of our trades, all of the trades, sorry. So we are still looking for the entries. So price took out that high. As price took out that high, we could literally take partial from any of the trades because we have like 3 positions running. So still looking for trade opportunities on our lower time frame. Let's go on the 3 minutes. Nothing interesting happened. Go on the 5 minute time frame. Now on the 5 minute time frame, marking out structure point, right? Now this was MSU buy, this was MSU PUI buy. Price already came to target, right? Then looking at 5 minute structure point at this low, this high, this low, and then this high. This was 5 minutes EPA. Price already came into this. So we've taken partial from all of this. Now we go back on smaller time frame to see if we'll be getting an entry opportunity. Okay, on the M1, this was 5 minutes EPA. This is a bearish candle. Okay, so let's see what price is going to do. So on the M1 time frame, nothing important, probably on the price takes out this low right here. So let's see what price is going to do. Price take out that low. Okay, price did not take out this low. So that would be the M1 liquidity point, right? The inducement liquidity. Now, after price takes out this high, right? Wanting to take sell from here, we have high to low. Price give us all of this. This was like the delivery right here. So a sell opportunity provided itself after price took out this high right here. But then we missed that. I will not be taking a sell because I'm more focused on buy. We're coming from a higher time frame, right? Even if you want to take this sell right here, the only CSP I'm seeing is the engulfing. So if price will come into this, then I will take myself. But I would not want to bank on that because we've already mitigated a 5 minute EPA. Okay. And price took out the M1 liquidity point. Immediately price took out the M1 liquidity level right here. It gave us a rejection candle. As it gave us this rejection candle right here, let's go back on 3 minutes and see if there's anything interesting happening. Nothing interesting happening. We've already seen a mitigation of our EPA, right? And now, because I have taken good trades, 1, 2, 3. But when I've taken good trades like this, right, that's when probably I begin to trade aggressively. So I've priced out this fake POS, this inducement right here on the 1 minute, and then gives me a CSP. I'll be taking this buy right here. Because looking at the PY that price will respect will be probably around here on the higher time frame. So I'll be taking this buy as an additional buy right here. I'll be taking this buy to still target this high or wherever it wants to go. So let's see. Okay, there we got stopped out because we went really aggressive on that buy. Then let's just play price and see what price is going to do on the M1. Nothing interesting happening yet. Okay, we are seeing these are structure points. Hold up. Now we are seeing this high and this low as our external structure point, right? So let me make sure that this low did not get it. We have this low and then this high as external. So then let's go on 3 minutes to see what price is doing. On 3 minutes, nothing interesting happening there. 5 minute time frame. Same thing, nothing interesting. Then just go back on the M1 to just watch what price will do. Oh, crazy. I think I got involved in one of these buys here. I cannot remember. I think I took a buy from here, but I don't know. Mm, maybe I think another broker gave an entry opportunity. Okay, yeah, this was the entry opportunity. Yes, I remember. I missed this right here because I know on live market, I did not take this, but somebody asked me if I would take this buy right here. But probably because when I was on my MT4, right? When I was on my MT4, why? Because when I was on my MT4, this buy right here, I think I missed that buy. Okay, I was not on chart when this candle formed. I was not on chart when this candlestick formed. But then for this one right here, price gave us this high and then this low, okay? And then it gave us a delivery right here, a fake break of structure and inducement without price breaking this low. So immediately price took out this delivery right here, took out this low right here. There was no candlestick pattern right here. But the moment this candle closed bullish, right? This was the candle closure. The moment this candle closed bullish right here, I took the buy somewhere around here and stop loss was protected. Yeah, I just remembered. Yep, I just remembered. I think, yeah, that was what happened. Okay. Then let's see where this whole buy is going. Price approaching our sell point of interest. Then let's just play to see. And this was around, yeah, this was around New York Open. Exactly. This spike up right here was exactly New York Open. This sell that happened right here was London Open. So this spike was an additional, this New York Open was an additional confluence to the buy. So now we're waiting for price to hit target. If we'd want to take an additional buy right here, we'll be having this fake break of structure inducement. I could probably get this. But based on my plan, I've already taken like 1, 2, 3, 4, 5, 6, 7 trades with 2 ending up as losses. 3, 4 winners, 1 B. So I'll probably not take any trade anymore. But then let's see if there will be a reason to take the trade, okay? Now this right here will be the 5-minute EPA. And then on the M1, we are seeing an M1 fake break, an M1 inducement. So we could get this right here on mitigation of EPA. If we get a CSP, we can take the trade. So let's see what price is doing. Okay, right there was no mitigation of EPA. But immediately price took out the inducement, gave us this rejection candle that led to this re-entry for the buy. Now, all of the buys that were running, right, they all got to our target. The problem might have taken additional partial, taking second partial on these cells, and I'll be leaving baby lot size to run to wherever it wants to go. Now, let's look at this PY that price is reacting from. I think that was from 4 hours time frame. Yeah, this was the week that will mark on the 4-hour time frame. But slightly above that week, we are having a 4 hours SLQ. Okay, this is what we are having right here. Then let's go back on H1. What is price doing? Price already took out the SLQ right there. As price took out the SLQ, we're seeing this point of interest as a possible sell zone. But trust me, for this buy, we want to target this 4 hours true break of structure. This is where our target should be, right here, okay? But we get the hedge right here. Then we go on lower time frame. On 15 minutes, what are we seeing, okay? Price is in our PY already, and then this will be our refined PY right here for the sell. But remember, we know this high above this zone is our 4 hours SLQ, okay? That 4 hours SLQ, yeah, I think so. So now let's see if there'll be a reason to take any sell from here. Now, on 5-minute time frame, price went directly into this refined point of interest. Then I go to my M1 to look for trade opportunity, okay? On the M1, price just mitigated this. So wait for a price delivery and nothing happened. Price broke through this POI, give us the
Why
rejection.
not take the rejection candle?
Because this is going to be aggressive movement.
Is this not a rejection candle too?
No, that's not rejection candle. Okay, this, oh, you mean this one right here?
Yeah.
Yeah, this is a rejection candle. But
For what?
remember, Yeah, but then remember from the trading plan, right? Remember from the trading plan, if you're having a point of interest or liquidity grab from a certain time frame, you cannot just jump from a 4 hours POI and go directly to the M1 to take your trade. Would want to see what 5 minutes is saying, or we want to wait for the M1 entry models and not M1 candlestick patterns. Okay, so let's see what POI is this before we know if we'll be taking this rejection candle. Okay.
For them, POI was it?
Okay, I think it was the, okay, you can see, right? This was the 4 hours POI. This one was the 4 hours POI. So price is inside of the 4 hours POI. And this right here was 15-minute point of interest. So overall, we are inside of the 4 hours point of interest. And from 4 hour point of interest, directly going down to the M1 time frame to take your trades based on M1 candlestick pattern, right? That's a very aggressive way of trading. That's very aggressive because you are not seeing any entry model. You're just directly going to candlestick to take trade. So for trades like this, right, I want to see a price delivery before I will take myself.
Okay.
Yeah. So even this suggestion candle right here, I will not take the sell. Rather, I'll wait for this upper point of interest. So price just broke through because there was no confirmation to take the trade. So these POIs are out of the picture. So we're waiting for this to get mitigated. And right here, price mitigated. This was like from 1 hour time frame. Yeah. So then let's go and refine it and see if there's a refinement on any of the point of interest, on any of the time frame. On M1, there was nothing. On the 5 minutes, still nothing, okay? Unless we want to mark out this week on the 5 minute time frame. So let's
And what
mark that.
about this week here?
It has already been mitigated. Okay, as you can see, this tiny wick right here already mitigated this one. Can you see that? This wick right here already mitigated this one. So I'll not be looking at this as my point of interest. Do you understand that?
Yeah.
Okay. So now let's see what price is going to do. If it gets into this POI or not. Okay. Now see something right here. When I mean that already been mitigated, right? Let me zoom in. Now you can see it clearly. Okay. This already mitigated this. This already mitigated this. This tiny wick already mitigated this huge wick. So this is not an unmitigated wick. That's already been mitigated. So we'll not be looking to trade from it. Do you understand it now?
Yeah.
All right, cool. So now this is the 5 minute time frame. We are going to wait for a possible price behavior or price delivery. M1, okay, sorry, I had that.
You forgot your POI.
Yeah. Okay, this is the POI on the 5 minutes. This was my POI right here. Then I go back on M1. Okay, I go back on M1 and then I see this right here. On M1, on that 5 minute POI, I am seeing a price delivery because we had structural low, structural high, and then price is giving us this. So price giving us a delivery, mitigation of this week right here, and price could literally drop from here. Okay, so let's see what price is going to do. We're waiting for a CSP to take the sell. No CSP, but this looks like a railway track.
I
Yeah,
would say red one.
the candlestick wicks, the candlestick body right here are like relatively equal. And then this had no wick, and then we're having tiny wicks right here. Everything looks equal. So I'll be taking this cell right here. Whoa, this is like 7 pips stop loss. So in real life scenario, I'm not taking this stop loss is like too large.
But
Okay.
here, sorry, would you here enter also already? Because we got in the refined area and we have a rejection here again.
Yeah. Yeah, because the refined POI was from the 5 minute time frame. So maybe we could have taken this one right here, the sell and then the stop loss. Maybe we could have taken this one. So let's take this sell for the sake of backtesting. Okay. All right. So price just broke through that POI. So this would end up as a loss. Okay. Price just broke through that POI. And then there was no reason to take any buy from around here. So let's see where price is going. So nothing important happening. All of these are just noise, noise, and noise. Let's go to 5M to see if there's a reason to take any trade. Now, on the 5-minute time frame, we are seeing this, and price is doing this right here on the 5-minute time frame. So if we could be seeing a possible delivery on the 5-minute, then we could take our sell. But there are no reason to take any sell right here. Then let's play it on the M1. This is what price is going to do. Okay, on the M1 price, okay, this was not price delivery. Okay, this was not price delivery, nothing interesting happening here for the sell. Then let's see where price is going. Nothing interesting happening. All of these are just noise. And 3 minutes, 3 minutes, now marking out 3 minute structure points. We have this, 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 this. So from this high to this low is our range. And then we have this, this. So if price takes out this high, then we can sell because we'll be seeing a 3 minutes delivery. Do you understand this? The fake BOS, the inducement.
Yeah.
All right, cool. Then let's see. Okay, no reason to take any sales from there. Then we'll go back on 5 minutes. 5-minute price just took out one level of structure, two level of structure right here, and then it's giving us a fake BOS and inducement. So we could be seeing this and then this. We'll be seeing a push down from here. Remember, these are 4-hour targets we want to buy up to this point. So we could be seeing a possible transactional liquidity right here on the 5-minute time frame. Then we go on 15 minutes. On 15 minutes time frame, price took out, gave a fake BOS and inducement. The price could be reacting from this POI, or price could be coming into the 15 minutes EPA right there. So now, points you'll be looking to buy from could be from this week right here, or when price mitigate this EPA based on the 15 minutes IOQ. Okay. And then on the M5, we are looking at a possible transactional liquidity. Let's then go to the M5, what price did. The price did not go back to take out this high. Now let's see if we get a mitigation. Okay, right here, we got a mitigation. We are seeing a 5-minute rejection week. On the M1 time frame, okay, on the M1 time frame, no reason to take any trade there. On the 3 minutes, nothing. But then on the 5-minute time frame, I remember from the plan, right? 5-minute time frame can also be considered. Okay, so we might be taking this buy right here to target this high based on the 5-minute rejection candle. Let's see how many pips that would be. Yeah, that would be like 3 point something pips. So that would be a good buy right here. Target this high before we can be seeing the drop based on the TLQ. Okay, see, this is like another re-entry, a continuation trade. Okay, so still looking at price so we don't get lost. Okay, so we don't get lost. It's like a structure point. It's a structural liquidity. It's another structural liquidity, and it's like ILQ. But then right after this structural liquidity, we're seeing this unmitigated weak right here. Okay, but also consider the timing. This is like 7 like 7:30 p.m. my time. So probably that'll be like close to like New York close and end of the trading day for me. Okay. So I might probably not have taken this trade. I'll probably not have taken this trade. But then let's see if it gets the target, or we could get a sell from this point of interest right here. Okay, so price broke through, took out the 2 SLQ, and then that's still not taking this high and then this high from the 5 minute. Okay. Okay. The price did not take out, price had not taken out this high that would lead to this, that the transactional liquidity. So this buy is still on, and probably might have gone break even on this buy. Oh, I was playing it on the 5 minute time frame and not the M1. Yeah, well, all the same, all the same. So good. Because let's see, after price did this on the M1, we would have seen, no, there's no point to that. Because this right here would be like a point of interest. And there's no point since it's not in our trading hour. Yeah. So that is how today went. Okay. So these buys, after taking out partial, let's say we are still holding all of these buys. We are still holding these two, 1, 2, 3, and then 4. Okay, so it is basically how today would have gone if we would have stick to our trading plan, our rules, and all of that. So the first trade we had break even. Second trade we had a 1 to TP. Third trade we had a win. This we had another L, a win, an L, an L, and a win. So overall we had 1, 2, 3, 4, 5 wins, 3 L's, and 1. If we would have followed our trading plan on everything, this was how today would have went. You get that? Is everything clear?
Yeah.
Do you have a system?
No, I understand.
Okay, perfect, perfect. Yeah.
Plus, it's only hard to get all together like that so
Yeah,
fast. In live market, I
yeah,
think it's way difficult there.
yeah. It's actually way difficult to understand, to like put everything together in live
Yeah,
market.
yeah.
Yeah, but that's why we do back test, and then we do review price action at the end of every day, right?
Mm.
After every day we review price action. It actually helps, okay? So if you get on chart, on live chart, and you want to like trade, just mark out your external structure from the higher time frame, know where price is going, and then from the lower time frame, you trade in line with that higher time frame order flow. Is that clear?
Yeah.
All right, cool, no problem. Yep. So it does basically everything for backtesting, and this is how you backtest. Okay, backtest the session in which you trade, and then also use the session highs and lows as liquidity levels, or probably as possible target too, and also try to use time in the session open for both New York, London, and also Frankfurt. Okay.
Mm.
Yeah, so that's basically everything about the backtesting. Okay. Yeah. Is everything clear? Everything good? I want to stop the
Yeah,
record.
it's fine.
All right, cool. How do I stop this?